Back to halftime. Let's get to our call of the day. Morgan Stanley's Adam Jonas upgrading Tesla to outperform and raising his price target to $400. That's about 60% upside from here. Jonas saying Tesla's supercomputer project Dojo could have a $500 billion enterprise value. So $400, Joe, that's just where Tesla hit their highs a couple years ago. But, you know, we've heard kind of the up and coming aspects, the new market aspects of this Dojo computer for quite some time. Do you think that something's changed now that would indicate that there's an additional $500 billion baked into this opportunity?
Well, Adam is the one that's suggesting the potential here, and some other words that he uses within the note as he talks about this potentially being a $10 trillion marketplace, and that Tesla maintains an asymmetric advantage in that marketplace. Now, you hear those words, that's pretty compelling in terms of believing that Tesla can continue its upward trajectory that it's had so far year to date and eventually hit that $400 price target that he has. Again, my ownership of Tesla is equal weighted in its nature. This is a stock that for you as a viewer, you have to understand it's exhibited a lot of volatility over the last 12 months, and I think you have to size the position accordingly to accept that volatility. You're always assuming risk in the marketplace. It's how do you manage the risk? How do you shape the risk? And I think a lot of the problem that investors have in their ownership of Tesla is they get somewhat tempted and intoxicated by the extreme price movement, in particular to the upside, and they extend too much leverage towards the position. And that leads you to be somewhat susceptible to the extreme volatility that this stock has. So the fundamental aspect of what Adam Jonas is talking about here in the long term, it's something that we've heard in terms of autonomous driving and self-driving taxis. We've heard about that. I mean, we heard years ago that they were going to offer something that was going to be competitive to Uber and Lyft. We don't see that in the reality of today. So the strong fundamental argument is there. I just think it falls back to more about how do you want to position to that fundamental argument, understanding that you can't, the strength of the fundamentals can't diminish the volatility that this stock seems to always constantly exhibit. That volatility is going to be there, and to me, that's the most important aspect if you're going to own this stock.
It's a total addressable market story, right? I mean,
yes.
if they can get to 10 trillion, that really is very compelling. That being said, the stock's was up 110%. Before today. It's now up 120, trades at 80 times forward. And so I think the question is it an auto company or a tech company? He's now pivoted towards this being more of a tech company.
We've heard that in the past, though, right?
Right. No, absolutely. But this is a company that gross margins are going down, right? I mean, that's kind of troubling. Talk about lack of pricing power, right? They've been lowering prices. So to me, if you're going to pay up for this, you have to really buy in to the autonomous angle and the technology aspect of this company.
I don't think this can be a tech company without the auto company. I mean, the first line from Mr. Jonas's report is investors have long debated whether Tesla is an auto company or a tech company. Now, today it's being valued as a tech company. Last week it was being valued as an auto company because of what you're talking about with gross margins. Here's the thing. I don't think you can get that total addressable market, I could be wrong on this, without the auto business doing well so that you've got a customer base upon which to use that AI and get the data that you want. Now, here's where this becomes a problem. Competition has been creeping up, right? And, you know, last week we heard that the German auto manufacturers at whatever that auto show was, I think it was in Europe, but I forget, you know, that they're really coming on strong. We've got a lot of U.S. manufacturers. This isn't the EV market that it was 10 years ago. So that competition that could eat into their automotive business can also eat into the technology business.
But maybe diversifying the revenue. It has the prospect of, you know, increasing their total addressable market, and therefore the stock is up 9% today.